And good afternoon. This is the Elliott Wave weekly update for the NASDAQ 100, being recorded on Friday, August the 22nd at 3:30 p.m. Pacific Daylight Time. I'm here on the cash market, the NDX, and I'm going to flip it out to my maximum monthly just to go over quickly what the cash, how I'm labeling the cash market thus far. And the NASDAQ 100 came into existence in 1985. And so that's where this chart starts. I did, from that point, count five waves up to the 2000 high in March of 2000. And then the NASDAQ went through the dot-com bust. So it was a pretty strong and devastating to prices decline, and where the market went from 48.16 and ended up back at 795. So it was quite a large drop, at least 4,000 points. So um, and I labeled that primary one and primary two. Initially, I think when I first started the count way back when, I had used a cycle degree and I put cycle one and cycle two. But then I thought, no, that doesn't fit because of the amount of data that's available. And I think that the NASDAQ one, the composite NASDAQ, began in the 70s. So it doesn't have that depth of data as we see in the S&P 500 and also in the Dow, which you can find data. First of all, on my computer on Thinkorswim, for the S&P it's 1928, for the Dow it's 1902. So it's quite a bit of data. It's easier to put in that very large picture. But the largest that we got is a primary degree. So what we're in right now is we've completed primary one and two. And so this is actually, to me, is likely just going to be cycle wave one once we get up here and get done. But we're just now looking for a primary third wave to be finishing up here. So we got primary one, primary wave two. We're inside primary wave three, and within it, there's going to be five waves of intermediate degree, of which we have one, two, three, and four are complete. So now I'm going to bring this down, put it on the 5-year weekly. There's intermediate three, there's intermediate four. And so again, October of 2022. So from October of 2022, we've been involved in tracking an intermediate fifth wave up here in the NASDAQ. There are going to be five waves of minor degree within this intermediate wave five, and we have one, two, three, and four complete. And again, same data as in the S&P. In the NASDAQ, that minor fourth wave completed on April the 7th of 2025. So from that low, we've been working our way higher in a minor fifth wave, which will consist of five waves of minute degree. And that's where the changes come in. So I'm going to drop down to the daily chart and just kind of start to review. So again, within minor wave five, there will be five waves of minute degree, of which one, two, three, and here's the change. I've marked wave four back at those lows on August the 1st. And now I'm going to bring it down to the hourly chart and we're going to talk why. The rally today in the NASDAQ was strong, but it didn't take out like it did in the S&P, wave one of which it could have been wave C down, right? I was counting this as a C wave down. This was an ABC up for an irregular B wave. And then we were starting in the minuet C wave down, and we had one, two, three complete, and this was to be a four. Well, it still could be, but it changes the pattern back to where this fourth wave is going to come in here. Do I expect that type of divergence between the NASDAQ and the S&P? I don't actually. because it's the same, the top 10 stocks in, well, the top seven, the Mag 7 are really within the top 10 of both the NASDAQ and the S&P 500. And what usually breaks that to be the top 10 being all NASDAQ tech stocks is Berkshire Hathaway manages to be sitting between 9 or 10, the ninth or the 10th position on that list. So while that's in force, it is the Mag 7 or those top nine uh, tech stocks within the S&P that have a much heavier weighting than the balance. Now, of course, there are days where the Nasdaq's going to move far greater than the S&P, um, but not out of this realm, let's just say, not out of the impossible that it does. So I am keeping these together in terms of the wave counts. And so I have moved, as I discussed, that if we came up and broke that level, which we did in the S&P, we did not here. This level here would have been 23,789. Our high today was 23,575. So if they could have kept that push going, as I thought maybe they would, we could have gotten there, but we didn't. And that's fine. I'm still labeling it 1, 2, and I'm still considering that minute wave 5 will form a diagonal because wave 1 is coming up in a 3. And so, as I mentioned before, I would have had a problem had this been wave 1, wave 2, wave 3 of a minute degree. So this would have been minuet wave 1, minuet wave 2, minuet wave 3 of minute wave 5. And so this being the 4, it was just like getting out of the picture. So I had a problem counting it that way. I went back and I looked at another one. It's like, well, if we were even looking at this could have been an ABC, I'll put that irregular B there, then this could have been one of C down. Because don't forget that what we had in that C wave is numbers that brought us all the way down below. Another 2,000 points down from where the market is trading right now. So with that in mind, I thought, okay, this could be wave 1 of C, wave 2 of C. And I want to tell you something. It actually still can be. That's now the alternate. Because of the strength, and because I do feel that we're likely going to continue the strength, even though kind of, once we got up here, and this is 11 o'clock Eastern, it just it didn't really gather out that much steam to continue to push higher above. Kept thinking maybe it would, and the S&P did, but we didn't here. Now, what do we have next week? Well, we got NVIDIA's earnings on the 27th. And now that's everyone's going to be looking. And well, that's going to give us the next boost up to the moon. Maybe. I think NVIDIA, for the size of today's rally, underperformed. And that could have been part of the expiration for today. Today's Friday expiration may have been not so much wrapped around anything higher than 178 in NVIDIA. And we actually closed at 170, 178. So basically, so that's probably the one that kind of, it was actually 177 and a half and then 180. So we'll see. We'll see how this all works itself out. But right now, I have put minute 4, and this is the gig. This is what also kind of bothers me, is that minute wave 3 took 3 months from the bottom to the top. Minute wave 4 took 2 days. This is August. This is July the 31st. This is August the 1st. So I'm like, wow, okay. Yeah, because of the way that it's trading again here. Now, again, I want to emphasize that the alternate is still that this is going to be wave A and that this is wave B, and we still can coming down. And this would be one, this could be two, and we're going to come flying down. And a third. And again, with that in mind, our levels are down here below. So we can't, I'll put them back up, but right now they are down here. And so for a C wave. And what we can do is we can kind of put these there to there, and that should give us this. And we can see where they look like still. So here you had 1.6818, and then I think I added 2.618 is down there as well. Let me take that one off. So 2.618, 21,541. So that's why I said, but it could really still be dropping down. Wave 1, 2, 3, 4, 5, getting into here. And then if I take it back out and we look at the daily, there's the previous fourth, still also in that same area. So yeah, I mean, that still has to be a part of the picture. It truly does it. And that just finishes minute wave 4 down here. And then we rally again. And it's kind of can get confusing, but again, I have to let it play out, but I want to cover all the bases and what the possibilities are. So right now, I flipped it. I'm showing you this particular count, and that is because of the break higher in the S&P, and that I would expect that this is going to get up there, and likely next week, just to complete this wave 1 of 3, to be honest with you, because here we have our markers. So we have 1, 2, if I can get a 3 up to here and a 4, and then I get a 5 and I can get up to there, then that would be the 3. But I think this is just the internal 3 going to finish. Then we get a little 4, and then we get a 5, and that hopefully brings us up to the 100%. Now, granted that what we need to do is this could be 1, 2, 3, 4, 5, A of the 3, and then we get a B, and then we get a C, still bringing us up into here, but sticking with the diagonal aspect of this move, of this minute wave 5. If it's going to be diagonal, one of the things that we have to understand is that it has to be a diagonal. It has to wedge. As it moves up to that pinnacle, to the top, it's wedging, and it's smaller and smaller until it finally hits that top. And so before, the way that it was working out, if this was going to be 4, then you're putting the wave 2 to 4, and that's here to here. It's like, no, it's and here's the rule. A diagonal triangle in the 5th wave position cannot be an expanding diagonal. So in other words, it's broadening out as the market moves. That doesn't exist. In a wave 1 or a wave A, yes, you can get those, but not in a diagonal for 5. So that kind of tossed that out. So that's where this came about then. Well, 1 and 2. Now, under that basis, what can we expect from minute wave 5? Well, we have 25,346 is where 5 would equal 1. And again, I want to remind you, wave 1 was very large. Wave 1 was that kickoff, and in fact, for the NASDAQ was over 2,000 points on that one day. That was over 3,000 points. The S&P was close to 300 points. So that was a wicked day that kicked off, which now we're looking at as minor wave 5, but that's what kicked it off. So if we take that up to 5, you're going to see that wave 5 should be pretty large. And here we have it. Wave 5 will have started down here at 22,673, and we have 100% up at 25,346. So again, we're still looking for this surge higher in the fourth quarter. Well, I'm thinking like, well, we slow down a little bit here. We get up to one, and then we get a third. We come back down in a four, and then we still have a fifth back up. And our first level, again, is going to be 25,346, but 1.618 is 27,000. And then we have these levels for that minor fifth wave. So we've got a great cluster in here, but I don't think it's going to complete the whole thing. So this is for the minute fifth wave. So here it has to be 3, 4, and or ABC 1 or A of 3. And then we get a B wave down and then a C wave back up. If we get to here, we come back down in a 4 and go back up and we diagonal. Yes, then we can start to see this level or in between. Now, how long is this all going to take? Again, it's interesting because we still have 5 weeks to the end of the third quarter, and the algorithms are still kind of looking for this for the fourth quarter, and the possibility that it could extend into the first quarter of 2026. So I'm like, well, okay, maybe it will. Maybe it will. And that would put that minute wave 5 for 3 months. And if we're starting it now, then we got September, October, November. And that works in terms of it topping out in the fourth quarter. So let's take a look at, so again, I'm looking for this internal third, maybe to come up to here, put the 3 in, come back down in a 4. Or actually, this could be 3, the 4, go up into 5, finish this, and that could be wave A of the third, minuet wave 3. We come back down in a B wave, we go back up in a C wave, and we end up here. And that completes minuet wave 3. I think up in this territory in here. Then we come back down in a 4, and then we go back up in a 5, and that's where I think we can come up into here. So we'll see. We'll see how this all plays out, but that's a general roadmap with the new labeling and the fibs and where they fall. And it's not actually that bad. The way the setup is kind of coming in, it's not that bad. It's actually all very plausible to me. So that's why I'm going to kind of leave it here and use this as an alternate. That this is like wave 1 of a C wave down. This is wave 2 of a C wave down, and we just kind of come tumbling down. But I got to tell you, that's the same thing as like I said this morning, and that I also said yesterday. No matter what happens tomorrow, whether it's a fly high or a fly low, it needs to go and not look back. Well, that's exactly what this move did. It started, it did not look back. It did not pull back, a little bit pull back, but it didn't pull back with any strength. And it just kind of roared until it got to that high. And then it played up in the upper levels for the balance of the session. So this was 10 o'clock Eastern. So for the balance of the day, it just traded in a tight range. But that rally did not look back. So it fulfilled that aspect of what I was looking for. Now, if it had turned and done it to the downside, I think we would have had this, but heading this way. And then it would have been stronger because this would have been 3, this would have been the 4, and we're coming down in that fifth wave. And then when we were looking for a low below 22,673 to put in that C wave and the minute wave 4 being over here. Now, could that still take place? I think it probably could, but there'd have to be some stock within. And it could be, for all we know, folks, it could be NVIDIA. NVIDIA kind of does a tumble, then yeah, that could come all the way back down because there will be ancillary, there will be other stocks that will go with, and then finding its low and then taking a running then starting the minute fifth wave. So could the S&P be in minute wave 5 while the NASDAQ comes down and finishes minute 4 and gets ready to launch higher in minute wave 5? My take on that is yes. As much as I want to run them together because they're so similar and they move collectively the same, I can't say no to that type of a scenario. So it could be one or two stocks that just absolutely get trashed. And a lot of these moves today were expiration moves. Tesla at 340, expiration move. Apple at 228, expiration move. So all of that comes off, and then what's next could be boom, boom. We'll see. We definitely will see. Let's go over and take a look. First of all, you can see in the moving averages here on the hourly, well, we're getting there. So the strength did not follow through as much as it did over in the S&P. So we have the 200 still, and the only one that's crossed over it is the 8. So we're looking for the 50 and the 20 to get up there above that 200, and then we will be in alignment to go up. So that keeps it alive that we may go down. All right, and then if I pull it out to the daily's going to show the same as it's on everything else. Nothing. Everything is still in alignment to go up. In fact, this would have gotten ready to break that, but it didn't. It pushed, and now that's above it. And so everything is back to looking good on the daily. All right, so let's go over to the NQ and see what we got. So here again, I filled in a little bit of this blank to show you that if for this third wave, if I'm just kind of putting it together with 1 to 4, then here we have 100% at 23,716. And that then could complete this third wave. We come back down and come back up. And here would be where I think we can get that fifth in. And then it's A of we're looking for an ABC up. So if this is, an ABC and we get up into there, then great. Then I'm going to mark it as such. And then we're going to be looking for the whole entire third, which will be a come up in 3, right? So it's going to be A, B, C, 24,313. And that's where wave 3 would be equal to wave 1. And I actually would be looking for a little bit more, as I always do. But in this case, since it's a diagonal, I'm going to let it live to be equal. I just don't want it to come in less. Otherwise, what we also have, so for the minute fifth wave, 618 is 24,616. I'm not looking for that. I'm going to be looking for 100%, and that's 25,756. And so these are also associated with this minuet third wave. I put that there just because, the NASDAQ does crazy things. So if they kind of do a push, they could end up here and still be in a good enough position. But then we have additional levels. We have the 1.618 for the minute degree, fifth wave, 27,600. We do have some high levels here. We got them up there. And so, and don't forget this, like we can let this thing can unfold all the way through December. And if we're going to say 3 months, then we're really looking at, if we get through September, still futzing around down here in the lower levels, then yeah, I think a surge could take us up to that 25,700. So that should not be a problem. All right, so here as well, what else do I need to include? So again, wave 2, and then more detail and just how this all broke down the C wave. But you can see A, B, 1, 2, 1, 2, 3, 4, 5, 3, 4, 5, C, wave 2. And then so far it's being left as an ABC up. Even if it gets up to here, it's still going to be, A, B, C up. So we got to let that kind of come through and get itself to to be a little bit more. And we will see, because it should be a 535. So the whole thing should be a 535. And this is a 5-3 and a 5. And then I could put that A wave over here on this if we got up into here. And then come down and then go back up into here to put that larger third wave. And it comes in a 3-wave structure to fit the diagonal. And so we're going to be connecting 1 to 3 and 2 to 4. So I will do it however I got to do it. But we'll see. We definitely will see. Now, again, next week, the biggest day I think is going to be, Thursday, some initial jobless claims. We have GDP next week, but on Friday we have PCE. And of course, you know who's going to be looking at those numbers. And again, I just want to reiterate that during Powell's speech, we all were listening, but he did not emphasize anything like, oh yeah, well, this is where we're leaning. He made it clear. He was a little bit more dovish than hawkish, saying that the current inflation, the changes are due to the tariffs, and they could be transitory. So in other words, the tariffs don't last forever. And even though right now there's no hint that they're going to come down. But in any case, I think that we just need to continue to work with what we have and to realize that there's not a guarantee that in September that there will be a rate cut. It was not even, I don't know if anybody actually asked him in the Q&A whether they said, hey, are you going to cut the rate in September? Because he wouldn't have answered. But he made it pretty clear, that the numbers are such, and that they did see an uptick in inflation, and it does concern. But they're attaching it to tariffs. They're attaching it to the fact that that could be volatile and go higher or go lower or be removed. So a lot of things got to go into this decision process coming up in 3 weeks, 4 weeks. Okay, I don't really have much else to be adding to the NASDAQ other than this is the picture for right now. And spot gamma levels, it was pretty amazing to watch the Qs. The Qs led this rally. What will be up next for the Qs, I imagine it'll still be there, is 580. That's the call wall. As it was here in the NASDAQ, we never did get up towards that call wall. But there it was, and we went through quite a few levels. The Qs were up at one point. I think they were up 10 or even a little bit more. And so they brought them back in towards the end of the day. But after hours, they started buying it up again. So let's see what they can do on Monday. I am expecting it to initially move higher, and they could do that on Sunday afternoon or evening when Globex opened, push it up and finish this internal third, which again, up in here, got a nice little cluster to do it, and then come back down in a B wave, and then go back up in a C to finish the whole shebang for wave 3. And so again, looking for the smaller, like the ABC part, 3 up, and 4A of 3, coming down in B of 3, going back up in 5 and C of 3, and ending up here, in this area, here or above. And that's going to be it. And our next update will be on Monday morning, and then I will have the adjusted and new spot gamma levels.